Financial Argument. Follow us on YouTube.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. The date is June 13th, 2016. And if hopefully you haven't been locked inside a cubicle, shielded from all the goings on in the world, but big news, obviously the terror attack over the weekend, but the effect upon the financial markets. Bitcoin broke 700 today. Right now it's trading right around 689. Gold is up at about $11 the ounce, just about trading at right around $12.84 the ounce. Silver lagging a little bit, $17.38 the ounce. And with us now, we've got Craig Hemke, aka Turd Ferguson, tfmetals.com. Make sure you go there, check out the forum, best precious metals user forum on the web. I say that categorically, and I check out the site myself as often as I can. And Craig, hey, it's great to have you back on.
Hey, Kerry, thank you for the kind words. I appreciate it. It's always fun to join with you.
Hey, well, it's from the heart. So, man, we were talking for months about 1263. We were talking about the yen-dollar exchange rate and talking about basically kind of things we're trading in a channel. A real locked-in pattern for months was happening. And then first of the year came along and everything seemed to change all at once. Now we've got Brexit coming. Somebody said, it was a Brit who said it, hey, maybe we'll get Texit, meaning Texas will exit from the Union, right? All sorts of crazy things going on in the world, though. So who knows? Maybe Texit will become a reality one day in our lives or whenever. But this is an insane world that we're living through.
If I ever needed inspiration to move to Texas, that would do it, Kerry. I'd get it right there. In fact, another good thing about Texas, I'm not sure if they've passed this yet. I think it may only be Utah that's done it. But the state of Utah allows you, at least as I understand it now, to use gold and silver coins, at least ones minted by the U.S. Mint, in exchange for other hard assets, meaning that, we all sit around and, look at our stacks of gold and silver eagles and wonder, what are we going to do with these once, their true value is reflected in a dollar price, and we worry about windfall profit taxes, and confiscation and all these other things that get bandied about. But at least in the state of Utah, again, as I understand it, you can now, you want to go buy a $200,000 house, you can use some of your bullion as part of the down payment. As currency, if you will. So if they're doing that in Utah, they'll probably do that in Texas before too long, which is just another reason for all of us good stackers, hard money advocates to move there eventually. It's a little hot in the summertime, but yeah.
It's a lot hot, even hotter than in Florida, which is pretty hot. But what they are doing in Texas, and to my knowledge are not doing anywhere else, is planning to build a state-controlled gold depository where individuals will be able to store their gold in what hopefully will be a safe place outside the U.S. banking system. Mm-hmm. And you'll be totally off the grid. The federal government presumably will have no control over this place. I'm not sure where this is going to be or what it's going to be, but hey, it could be quite good.
Yeah, a few years down the road, you get a bunch of Texans storing their gold there. That could be the thing that would cause a second Alamo.
That's for sure.
The feds, the national, what do they call them? The federales come riding in, wanting to get take everybody's gold back to Washington. That would probably spark your revolution right there. No, that's just another instance of just taking more physical gold out of this paper system. We're definitely headed in that direction. You and I have talked about this, that's that physical gold underpins this paper derivative system. That's a pricing scheme that's really run as a kind of a confidence scheme in that people own gold in all these derivative forms, whether it's the GLD or their futures contracts or their unallocated accounts. And they own it that way because they figure in kind of a confidence scheme that if they ever need to get it, they can.
Yeah.
Once we get that first delivery failure, as gold is taken out of the system, somebody lines up to get their gold and then they're told they can't have it. Mm-hmm. That's when everything starts to change, Kerry. And the music stops and people are scrambling for a seat. I like to say that the metals through this paper derivative scheme are priced as if they are abundant, when in fact they are scarce. And what I mean by that is what's abundant is the paper derivative. What is scarce is the physical metal backing the paper derivatives. And so it's an economic mispricing that will one day rectify itself. And in the meantime, we're just glad to see that the multi-year downtrend has been broken, and that kind of makes everybody a little bit happier. And we'll see where the rest of the year takes us.
Yeah. Well, it's the same thing with a bank. You're happy with your money in the bank, but the second you think you can't get it, all of a sudden, then you want your money. When you think you can get it, you don't want it.
It's kind of like a grocery store. You live down there in Hurricane Alley, right?
Yeah, right.
You can go today and without any concern and get a loaf of bread and a gallon of milk at the grocery store. But you know what happens whenever the hurricane flags start flying, right? It'll be there 3 days from now. The same thing will happen with all these unallocated paper derivative accounts of gold. Once somebody realizes, wait a second, what do you mean my account, at this mint or this company is pooled? What does that even mean? I didn't know that was the case when I signed up. I thought I owned gold. I want my gold now. Well, you can't have gold. Everybody else has got it. Right. And that'll really be fun times to live through.
Yeah. Well, there's going to be some upset people around, huh?
Yeah, that's for sure.
Yeah. So what about the yen and the dollar, which has kind of been underpinning the whole gold trade for the past several years?
Yeah.
What's going on with it now, and why is it different?
Pretty much underpins every trade at this point, particularly the stock market. About 80% of the New York Stock Exchange volume and now is just simply high frequency trading computers swapping positions back and forth at the speed of light, trying to nick each other for fractions of a penny. I mean, the idea that mom and pop are buying 200 shares of Coca-Cola because the fundamentals are sound. There might be an occasional ticket like that through a stockbroker someplace, but that's not what the stock market is anymore. And so you get this illusion that's perpetrated by CNBC and Bloomberg, and investors today bought stocks and the Dow closed up 55. BS. They didn't buy crap. It's all these HFTs that are buying and selling futures and in ETFs and things like that. And they're taking their cues from a handful of inputs. And one of the most dominant inputs that these high frequency trading computers follow is the dollar yen. You'll see it listed by the paired symbol USD for US dollar, JPY for Japanese yen. And it's actually an inverse. When that is going down, the Japanese yen is getting stronger. And when the USD JPY is going up, the Japanese yen is getting weaker. And that's what the Japanese have always wanted through their own QE. But this year, that's all changed. The yen's getting stronger. The dollar yen is going down. And there are almost daily manipulations now by the Bank of Japan and probably by our own Fed and, what we call the Exchange Stabilization Fund or whatever, to support and pump up the dollar yen, weaken the yen, because the computers see that and they start buying stocks. Kerry, we saw it today, overnight. That dollar yen was breaking down, moving through some key indicators, almost making a low for the year. With it, U.S. stock futures were down, and we were looking to have a pretty tough day on Wall Street. And then 1 minute after New York Stock Exchange opened at precisely 9:31 Eastern time this morning, that dollar yen shot up about 60 basis points, more than about 0.5% in a matter of seconds. The computers saw this happen. If I can kind of give them a little, human intelligence, if we will, they saw that input go up and immediately started buying stock exchange S&P futures. And before you know it, the stock market wasn't down 100 points. No, it was actually green on the day. See, everything's fine.
Amazing.
That's how the stock market is manipulated. For the Fed and the powers that be to drive the stock market higher doesn't mean they have to buy trillions and trillions of dollars worth of stocks. They just have to influence the computers, the 80% of the volume, to do the work for them. And they can do that through Forex and through managing other indicators like the volatility index and get the computers to do the heavy lifting for them. They did it again today. They'll probably try it again tomorrow. They'll definitely try it on Wednesday when the FOMC meeting concludes. And folks just need to understand that what they think is the stock market is actually just an illusion. You can profit from it, make you feel good that your 401k's up. But the idea that it's some kind of somehow fair, free market, that train has left the station about 20 years ago. Now it's all just kind of an illusion.
So it doesn't exist. In other words, it's just, like you say, an illusion.
It's there. I mean, it exists in the fact that your 401k balance, is what it is, and you can go on Ameritrade and day trade and do all that kind of stuff. I mean, the numbers are there. Yeah. But this idea that the stock market is somehow a fundamental reflection of strength in the economy and corporate earnings and PE ratios and investors came today and bought stocks and the Dow rallied 80. That's all nonsense.
And where capital
nothing
goes,
like that at all.
Where capital goes to get allocated, it doesn't happen that way anymore.
That's all BS. It's all BS.
No, it doesn't, huh? Who would have thunk?
Yeah, who'd have thunk it? And it serves the end, I mean, why do they do this? Again, it's the last, besides political motives and things like that, the Ben Bernanke and even Alan Greenspan before him, and certainly Mother Felon, they're all big believers in this notion called the wealth effect. And that is, if you feel good about yourself, if you get your quarterly statement from your 401k and it's gone up, then you're likely to go out and buy a new refrigerator, maybe buy a brand new car.
Yeah.
And that promotes jobs and more building of refrigerators and it's a virtuous cycle. So if you can pump up the stock market, then you can make everybody feel better. And it kind of becomes this, like I said, a virtuous cycle. That's what they're trying to do. And we'll just see how long they can keep the plate spinning, Kerry.
Yeah, that's a good analogy. Keep those plates spinning. And then, so do you think they've just not been able to keep the price of gold down, or they just decided to let it go up?
Well, there are some fundamental realities that are taking place. One, the price of gold has tracked the value of the yen really tightly. Since about 2008, but particularly tight since 2012. And you can pull up go to a chart or a charting website like barchart.com. Anybody can do this. They can pull up a chart of the dollar yen and lay a chart of gold over it, and you can see the clear one-to-one correlation. Again, this is a paper derivative trade. The actual physical fundamentals of gold and the tonnage going to China and India and all that stuff, none of it has mattered, because the pricing is all done on this paper derivative exchange. And so price changes whether there's buyers or sellers of the derivative itself. That's really all that matters.
Right.
And so price has gone down, 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 and down. Well, finally, where we've changed now this year is we've broken out of the downtrend over the last 3 years. We've moved through all of the key moving averages. And so we've got this kind of our own little virtuous cycle where these computers, instead of selling every rally for the last 3 years, with price having moved through all of the moving averages and making higher highs, all of a sudden these computers are buying the dips. And so we kind of just keep moving higher and higher. We even saw this over the course of the month of May. The COMEX got huge almost record levels of open interest, meaning the amount of contracts that have been issued there, and the speculator interest was at almost record highs. And price had moved up to 1,300. And then we got all this Fed jawboning talking about higher rates, and price corrected about $100 and went down. And everybody thought, you get all these same old perma bears out there talking about, now we're going to 900. Well, not so fast. And now we've retraced. And as you mentioned, we're back up to about 1287 as we speak. And now we'll just have to see what comes Wednesday, because we get the conclusion of the June FOMC meeting, the one that all of the Fed goons were jawboning and was going to be a live meeting and all this other nonsense about rate hikes. Well, that's not going to happen now, but who knows what their statement will read at 2:00 on Wednesday. I'm sure they'll try to talk about how now maybe July is going to be a live meeting. And obviously gold and the dollar will react to it. But I think from here, we're still looking pretty good. And if we can make another set of new highs above 1306, that might set off even more buying, and we could move it well into the 1300s pretty easily.
All right. Well, that's going to be interesting to see there, Craig. Guess we should leave it off here at that. Just tell us about your site, where to find you, and how to join.
TF, as in Turd Ferguson, tfmetalsreport.com. It's a simple $12 a month if you want to play along every day, but a lot of the site's free too. I appreciate what you said about it being a great exchange of ideas. It's really the folks on the site that make the site. It's like our own little Wikipedia in a way every day. Everybody's out there scouring the internet for different points of view and research and analysis. It's really proud of what we've all built there. And I encourage everybody to check it out.
Yeah, it really is a great site. I love it. I love the exchange of ideas. You got some really bright people on that site, and they're fun to read and interact with. So as always, you'll find a link in the show notes to this interview on financialsurvivalnetwork.com. Craig, we will talk to you again real soon, and keep up the great work. Be well.
Kerry, thanks. All the best.